What a wild ride it's been, and it's not just me saying that either. Here's the market's headline from this weekend's Wall Street Journal. The broad market, the S&P 500, surging in January to all-time highs, along with the Dow and the Nasdaq, before slumping into correction territory and then recovering again, and finally ending the first quarter in the red, down 1.2%. This is the first time in 10 quarters that either the S&P 500 or the Dow Jones Industrial Average have posted a loss over a 3-month period. And things weren't much better at the tech-heavy Nasdaq, a gain of 2.3%. Yes, that's good, but that's the weakest quarter since the fourth quarter of 2016. So what's going on? Well, the answer is a massive change in tone. In 2017, the markets just went up and up and up as enthusiasm for the Trump presidency, very strong corporate earnings, enthusiasm for the tax reform bill that finally passed in December, and we think quite possibly some central bank dabbling in stocks that we don't know for certain helped to keep the momentum positive. Now, the threat of tariffs on steel, aluminum, and around 1,300 other types of Chinese goods mean investors are worried about a trade war. And as you know, that story is ongoing. Tariff, of course, is another word for tax. Tax hikes are inflationary. And the market is fearing that interest rate hikes will come along now because that makes investing in stocks less attractive as traders move their money out of stocks and into bonds. There's concern that all this may dampen consumer sentiment, which is currently at a 14-year high. Then there's the political turnover at the White House that does very little to calm jittery trader nerves at this time. And finally, there's Facebook, whose shares have been tumbling and management stumbling over accusations that it's simply lost control of user data. Investors have been fretting that Facebook and other tech companies will no longer be the megastars that they have been over the last year or so. So for all those reasons, the mood in the markets has changed dramatically in the first 3 months of 2018. But there is one more reason not often spoken about in the hallowed halls of the stock markets in New York, and that is that President Trump may not turn out to be the economic savior for the US economy that he presented himself to be. And remember, the markets went all in on Trump back in 2016. Let's see what happens in the second quarter when US corporate earnings are still expected to be very strong, but it may yet turn out to be a continuation of that wild ride headline printed in the Journal this weekend. Terrett, CGTN, Washington.